Good morning friends, welcome to Sharekhan pre-market view. Indian markets yesterday consolidated after their worst monthly performance since 2011. The markets had a very deep cut in this month. However, yesterday was a day of consolidation amid very few weak news. If we look at back in the US market, they continued to fall down. Yesterday, the Dow Jones had a 115 points cut. S&P was down by about 16 points, whereas Nasdaq had a 51 points cut. This was amid continuing concerns over the growth and other issues in China, as well as the Fed's strategy in terms of the lift-off that we are going to have on the interest rate. If you look at the Asian markets currently, given that the slew of data which has come in, China was weak, the PMI has come in, the data is very weak and below consensus. So the Asian markets are also trading in red. Singapore Nifty is indicating a very deep cut for the Indian markets. It is currently down by 115 points. So negative opening there after poor economic data. Yesterday GDP came in at about 7%, way below consensus estimate, which was closer to 7.4. Even the core sector growth, the 8 industry core sector growth data came in at about 1%, which was again way below the overall estimate, showing that the growth concerns are slowly emerging in the Indian markets as well. Now after this gap down opening, we'll have to see how the Nifty reacts. We'll have a view from our derivatives team there. But if you look at the flows, generally flows in the cash market continues to be negative. FII sold close to 551 crore in the cash market. DII yesterday supported by buying about 479 crores in the cash market, whereas FIIs were buyers of index futures worth 539 crore. Now let's have a view from our derivatives team as to how Nifty is likely to react after this huge gap down opening.
Good morning friends, we'll give analysis on derivatives. In yesterday's market, with mixed to negative cues from the international markets, Vancouver markets open with a positive gains, or you can say on a flattish note to be precise. And thereon, we have seen soon after the first few minutes of the trade, Nifty nosedived into the negative territory. But however, at around our VWAP level, which was at around 8980, 8970 or so, we have seen Nifty taking some kind of support and then inching higher in the mid part of the day, and eventually with some kind of volatility as it continued to show mixed kind of movements in yesterday's trade, and eventually we closed just on a flattish note, just 0.28% lower, and just above 8,000 levels at 8,000.05. Now in the open interest terms, we have seen an addition of around 1.5%. As yesterday's on the derivatives front, it was a low volume day, as people were eyeing on the GDP data to go to further decide on the market movement in the coming trading sessions. So we have seen a minor addition of only around 1.5% in open interest, with around 3.13 lakh shares were added. However, the cost of carry also increased from 3.5% to 5.5%. That is, premium have increased from around 17-18 points to currently around 25 odd points. However, we'll read this data as some kind of minor short position which was been created ahead of the event in yesterday's trading session. Put call ratio have also increased higher by around 4 basis point from 0.99 to 1.03, and have reached a resistance of around 1 odd levels, indicating there was a significant amount of put build-up was observed by market participants in yesterday's trade. While volatility index, in line with the event which was been in the later part of the day, that is the GDP data, we have seen a volatility index also inching higher by around 5.5% and settling at 24.60. Now again on the options activity, as suggested yesterday's also, since we are on the first week of the series of the new series, we are seeing majority of the at the money and slightly out of the money strike price showing an addition in open interest. 8,100 and 8,200 call option has seen an highest addition in yesterday's trade of around 11 and 6% respectively. While in put option, we have again seen 8,000 put option becoming the highest in terms of open interest. The position again shifted from 7,800 to 8,000, put option, where 8,000 put option have seen an addition of around 12 odd percentage, followed by 7,900 has seen an addition of 15 percentage, and 7,800 has seen an addition of around 5 odd percentage. So seeing the options activity is difficult to predict the future movements of the market, and it just reflects the overall the range of the market, which could be anywhere in the range of 7,800 to 8,200 levels for this series. There is no securities in bank period for today's trade. On FIS terms, they continue to create some kind of long positions in index futures. There were net buyers of around 539 crores in yesterday's trade, and the open interest of FIS in index futures went up by around 4 to 5 odd percentage, indicating some long positions created by them, while in index options there were net buyers of 1400 crores, and stock futures there were net buyers of 659 crores, and stock options net buyers of 56 crores only. For the today market level, a 5 days gap stands at 7940 with a lower range at 7940 and higher range at 8200. SGX Nifty is suggesting a gap down opening, as there was a disappointing data of GDP in yesterday, and also the international markets have also seen some kind of selling pressure. So we are expecting a gap down opening of around 100 odd points. Now in today's trading session, we are obviously opening below our VWAP level. So look out for the VWAP level. If it sustains below VWAP level for the first hour of trade, then we might see a continuous selling in today's trading session also. To give you a highlight, SGX Nifty is down by 105 odd points at 7895. That's it from derivatives. Thank you.
Friends, let's look at the trading ideas for the day. The first one being ITC. Now, as per media reports and as well as indicated by management, ITC is set to debut in the range of dairy products, starting with ghee, which would be the first product which would be available in the end of the current quarter. Now this is positive news for ITC, and one can long ITC with stop loss of 320 for potential upside of 333 and above that at 336. Given the sharp correction in the crude price, barring last couple of days move, yesterday we had a huge cut which has come into ATF prices. Now the average price now stands at 5816. Which is 11.6% drop in the ATF price. Now this augurs well for some of the airline players, and one can long Jet Airways with stop loss of 330 for potential upside of 347. Moving on to news update, yesterday's GDP data came in at 7% versus 7.5% QOQ and expectation of about 7.4%. So bad number there. April-July fiscal deficit stood at 69% of the annual target. Government is planning to amend RBI Act by February to set up a monetary panel which would take decisions on the monetary policy. August records monsoon deficiency of 22%, and now the overall deficiency of rainfall stands at 11%. Government allows Reliance to sell LPG to private marketers. FIIs amid concerns over China and the Fed liftoff have pulled out a record 17,000 crore from the Indian equity market in the month of August. This is the highest monthly outflow, which also led to a huge underperformance in the Indian markets in the month of August. Petrol prices have been cut by 2 rupees and diesel by 50 paise per litre. Government is soon going to allot 62 offshore mineral blocks for mining. India pitches for rating upgrade by S&P on strong macroeconomic data. Yesterday, Finance Ministry had made a presentation to S&P as to why they should look at a rating upgrade. JSW Energy is in talks to recast 6,000 crore of debt under the 525 scheme. US has extended anti-dumping duty on Indian preserved mushroom for 5 more years. Now IRD has said that exchange traded funds with GSEC underlying gilt ETF will be part of the approved investments for insurers. The regulator said that they should be issued and managed by mutual funds registered under SEBI regulation. Now Eros Media has acquired worldwide rights of Excel Entertainment and Dharma Productions upcoming Bar Bar Dekho, and has also announced its association with Excel Entertainment for the worldwide release of Rock On 2. Watchlist that we created for the day, stock with positive bias, we have Hexaware, Cipla and Lubin. Whereas stock which one can short from intraday trading perspective, we have Adani Port and Glenmark Pharma. Stocks that we like from long-term investment point of view, we like Aditya Birla Nuvo, HDFC Bank, M&M, TCS and Ultratech Cement. That's it we have in today's session. Thank you.